Hello there, my name is Karen Jones, Content Editor for the Society of Technical Analysts, and today we're looking at the US 10-year yield. The reason being, quite simply, that we have broken above this resistance line which extends all the way back to October 2022. It connects the peak that we saw in March 23, and we have cleared this with gusto over the past few days. So what next? Well, these previous highs at 409 and 433 are going to act as near-term magnets for this particular break higher. But I just wanted to show you some things that I've noticed on the weekly chart. So when you look at the weekly chart, you can see that you've done a fairly classic ABC correction, and the market has held remarkably well at the previous peak at 325 and bounced strongly off this. It does suggest that the bull trend for higher yields remains in place, i.e. weaker bond markets. The way that this previous resistance has now acted as support suggests that is the case. Also, when we look at things like the long-term charts, we can see that this is quite a nice consolidation, and the market is now well placed to tackle this 433 high. Going back briefly to the weekly chart, you can see on here that I've put on some Fibonacci extensions. And above this 433 area, we do have a Fibonacci extension towards 467. But beyond that, we've actually got very little indeed until we get down to the high that we saw in 2007. Now that comes in at nearer 529. So above 433, we've got 467, and then not very much until 5, and this high over here at 529.